It's Friday night. You're about to watch the series finale of Breaking Bad, and you're hit with this message. Your TV isn't part of the Netflix household for this account. This was my life last week. It was in that moment Netflix would convert a borrowing household into one of millions of new paid subscribers. Is Netflix stock the streaming wars victor? We're going to take a look at their Q3 earnings today, and it was a really good report, hence the stock jumping 15% this week. Everything is looking great for the company, so we're going to go over the key takeaways here. So the results were nothing short of excellent. Some concerns I had mentioned in the past about Netflix have been addressed. The company appears to be returning to a higher growth rate, and it's moving into some very intriguing new verticals, including this, a real-life Squid Game experience. They must have taken note of the 520 million views that Mr. Beast got on his $456,000 Squid Game in real life video. Their password sharing crackdown is proving effective, as evidenced by myself anecdotally, along with 9 million new paying customers. Who would have thought that people who are not paying would start paying at a level greater than zero? Absolutely astonishing. So revenue came in at over $8.5 billion, $8,542 million, above what they had projected for, with global streaming paid memberships of 247 million. So these numbers were up 7.8%. So revenue had 7.8% growth, and the number of paid subscribers was up 10.8%. So as you can see in the chart, growth rates are ticking back up to double digits after a tremendous slowdown over the past couple of years. And this was one of the concerns I previously highlighted, was that, they're having this low single digit revenue, as you can see, over the past few quarters, 2.7, 3.7%, 1.9%. Not great. And then same with the membership growth, was growing under 5%. If we go back to Q3 of last year, it only grew 4.5%. Then 4%, then 4.9%, and now it's started to tick back up. Last quarter, 8%, and this quarter, 10.8%. And then they're also projecting for Q4 here, their revenue to grow over 10%. So is Netflix becoming a growth story again here? Now, I also maintain, I think it's very impressive. Any company that's really growing meaningfully in the current macro environment, I think tells you a lot. So Netflix stated in the report how success in streaming starts with engagement. It's our best proxy for customer satisfaction. And when people are watching, they are more likely to stick around, leading to more retention, and recommend Netflix to their friends, leading to more acquisition. They go on to say the variety and quality of our programming, combined with our reach of 247 million paying households globally and growing, their superior recommendations and intense fandom means they're able to generate higher engagement than competitors. In the US, for example, they had the most watched original series for 37 out of the first 38 weeks of 2023, and the most watched movie in 31 of those 38 weeks, according to Nielsen. Now, as you can see in the chart here, Netflix is dominating the traditional streaming platforms. They have 7.8% share of US TV screen time daily, much higher than anyone else. Prime Video is up next with 3.6%. Disney all the way down at 1.9%, HBO Max 1.2%. They're being beat out only by YouTube, which I don't think is a completely fair comparison. It's a totally different thing, but YouTube does have 9% of that daily screen time. So I think it's worth pointing out the risk here with YouTube and potentially changing consumer preferences. Because if we look at the same chart from a previous quarter, you can see back in June of 2023 that YouTube's share has actually ticked up from 8.8% back then to 9% now, while Netflix has actually gone down from 8.2% to 7.8% in the new quarter here. So I'm not too hung up on this, even though the company did highlight, the importance of engagement. I focus more on the number of members. Is there enough value offered to keep customers from canceling their monthly Netflix subscription? I'm less concerned with whether people use the platform every single day or to what extent. Do I want to keep my Netflix subscription because there's at least one thing worth watching next month? That seems to be a better way to get a pulse on the business. But I suppose there are other benefits to engagement, as I mentioned before, like recommending shows to friends, which leads to acquiring more customers. And also, as Netflix is now moving more into an advertising model, this will become more and more important. We'll touch on that later. But there's still 50 or 60% here made up of a dying market that consists of broadcast and cable and older forms of consumption. So as long as people still retain the attention span to watch something longer than 30 seconds, God help us, then Netflix still has a huge runway for growth. So where Netflix really shines seems to be in their international approach. They're having greater success, it would appear, than their peers. And it seems that a big reason for that is because, traditional companies in the US have historically taken an outward-in approach, just kind of exporting American content, whereas Netflix has taken an inward-out approach, creating regional content that resonates in a specific country and ends up being popular internationally as well. Take Squid Game, for example. Some more little nuggets from the report. One Piece is a great example of Netflix's variety, reach, recommendations, and fandom at play. Based on the best-selling manga series, our live-action adaptation generated stellar reviews, loud conversation on social media, in particular TikTok, and huge watching, 62 million views globally, making it our first ever for English language title to debut at #1 in Japan and pushing the series to #1 on Netflix's global top 10 for 3 weeks in a row. Now, this is a show I used to watch as a kid. Netflix appears to be the only streamer pursuing this international strategy with great success. And they also note over 70% of our members are now outside the US. We are now producing or co-producing in over 50 countries and languages. In Q3, we saw big hits in every region and across multiple genres. So what's next for Netflix here? They state we continue to innovate and invest in engagement off Netflix through our consumer products and experiences. Whether it's Scoops Ahoy ice cream or Surfer Boy pizzas, our pop-up Netflix Bites restaurant, or live Bridgerton Ball and upcoming Squid Game experience, that's the one that's most intriguing to me. Fans of our shows and films want to engage more directly with these stories, including between seasons. So over the next few years, we will be developing Netflix House. This is really interesting. A physical flagship destinations that combine fresh, new live experiences, as well as food and retail, so fans can visit many times a year, safe in the knowledge there will always be something different for them to enjoy. In the past, I've said Netflix kind of needed a new engine for growth. Could this be it? It's early, but this is definitely something to keep tabs on, and watch out, Disney World. Disney's been facing all kinds of issues. So Netflix is also moving into sports. They've had many viral documentaries, and they're going to have their first ever live sports event, the Netflix Cup, on November 14. And, last but not least, you have a huge opportunity here in the advertising arena, getting back to advertising, which is in its early innings. They stated adoption of our ad plans continues to grow, with ad plan membership up almost 70% quarter over quarter, and 30% of signups in our ads countries are on average to our ads plan, with more work to do to scale this business. Our $6.99 per month ads plan in the US continues to support our ads plan growth. We remain very optimistic about our long-run opportunity in this very big market, which they project at $180 billion. Ad dollars follow eyeballs, and more TV viewing is shifting from linear to streaming. We're a leader in streaming engagement, and the engagement of our ad tier members is strong. So as I said earlier, this is where the engagement will become more relevant if they move more into advertising and generating more revenue from that. While we have much work to do to build out this business, we're making good progress in laying the foundation for what we believe should be a multi-billion-dollar revenue stream over time. So, in conclusion, everything is looking great. Their free cash flow is set to absolutely explode, as you can see here. It's increasing significantly. So things appear to be looking up for the company, which saw its stock price just get decimated in 2022 among a lot of other names. Netflix stock was down 70% in 2022. But it looks like the story is changing. The balance sheet is strong, growth accelerating, and the company is buying back shares. They were originally authorized to repurchase $5 billion, but the board has just authorized an additional $10 billion for stock buybacks. So Netflix is on my watch list. While I don't currently have a position, if I had to invest in a traditional streaming player, so excluding YouTube, Google, it would absolutely be Netflix. I think that they're the clear winner right now. So I look forward to hearing what you guys think in the comments below. If you enjoyed the video, don't forget to like and subscribe. I'll see you guys on the next one.